Okay. All right. So I just called this the skyscraper is getting built because that's how I look at the stock markets and how uh, each of these stocks are going up. Um, we never get to see the summit, but we're also trying to reach the top of the skyscraper, which keeps going up and up and up. Okay. So thank you for starting this off. I think I'm recording this. Yeah. So I call this the universal question. Is the price of this stock going up? I hear this all the time, even from experienced traders or from uh, freshers who are just starting off. Everybody wants to know, is the price going up or going down? And of course, when will it do that? Now, this when is the holy grail of technical analysis. I will not cover it here, but there are people who can very comfortably talk about when a stock price is going to reach what level and when. Okay, there are tools available for that, and to the extent that one can master that, people can make tons of money being able to analyze that. So the universal question is being asked about any stock anywhere in the world, anytime by everyone. Okay, whether in India, by Indians wanting to invest in India or non-Indians wanting to invest in India, about any stock, whether it's LIC in India or MU in the US, it's the same question. Okay. Therefore, I call this the universal question. And then the trick is to be able to get the universal truth. Okay. Um, Now, the answers to these questions, the Ivy League professors would say there's no way you can answer this question because the stock market is following a random walk. It's like a drunken fellow walking with no particular aim. So the professors in universities who teach all this would say, no, you cannot predict the stock market. We cannot have a universal truth about this question because it's a random walk. Whereas the practitioners of this trade say absolutely yes, it can be predicted. The stock market prices can be predicted. So now that I'm no more a full time professor, I come under the practitioners group and I say it is predictable because I've been doing it, I've been teaching that to my students, and I see my students benefiting from that. Okay. So the answer to the question as to where the price is going up depends on how we understand the stock prices as depicted in the chart, and I'll show you a chart as well. Okay. Now this universe, just like the universe in which it is embedded, the financial universe is embedded in the larger universe. Since the larger universe is ever expanding, at least in our lifetime, this financial universe, being a part of that, is also expanding. So the skyscraper is constantly going up one floor at a time. How soon a new floor gets built is another matter, but it is forever expanding. Therefore, if you just enter this and just stay on, you will go up. You don't need to ask the question and seek answers, because if you enter at the left bottom, you will constantly keep moving up to the right top. I have not seen a single chart of a stock anywhere, whether in the US or India or anywhere, where the prices start at the left top and keep going down to the right bottom. There are times when this happens during the whole journey, like here, okay? But generally speaking, over a period of time, the prices keep going up and up and up. Okay, so if you are what is known as a coffee can investor, you are a passive investor. You just buy and hold, and what people generally try to describe themselves as a long-term investor. I have a different definition of a long-term investor, but the non-satirical view of a long-term investor is someone who buys and just keeps it, okay, and it keeps going up. But what use is that is a different matter, because for me, investment has certain purposes. So we invest in order to meet those two purposes, at least to me. One is I want regular income, and number two, I want my wealth to keep increasing in value that I can dip into. So I invest to get these two purposes fulfilled, not just to invest and forget about it. Okay. So, given that I have these two purposes, I try to have them fulfilled by looking at this chart, which for every other stock goes from the left bottom to the right top. So I see how do I benefit from such a movement of the share price. Okay. So how is the staircase to this heaven being built? Very simply, it is a right-leaning pizza tower. Um, I don't know when it will fall, but right now it's not falling. It's all being held together by some force. Okay, so I don't question that force. It could be some kind of a cantilever force that is holding it up, but the staircase is constantly going up. It is going up one level at a time. What each of those levels mean, we'll talk about it later. But it goes up and down. It does eventually go up higher, but as it goes up, it comes down and then continues its journey upward, as you saw. And the party keeps moving from one floor at a time. Different people enter the staircase and they enjoy every level and they keep moving up. And every level seems to have a floor and a ceiling, which has different height. And I'll explain what I mean by this soon. And as you dance at each level, as you keep going up, you hit the floor, which is a support, or you jump up and hit the ceiling, it's a resistance. So as you meet the resistance, you say, okay, let me go to the next higher floor and keep dancing there and join others there. So this is what is happening, and you understand that behavior through technical analysis. Okay, so at the very least, if you understand how you get the support and you get the resistance, and how do you move up to the next level, you can keep making good returns in the market. Okay, so what are these floors and ceilings? What are these supports and resistances? Simple averages. So as long as you are above the average, okay, you seem to be going up. If you are below the average, you keep coming down. So these are known as crossovers in technical analysis terms. But very simply, you look at today's price and say, hey, is this today's price above the last 9 days average, last 45 days average, or 200-day average? And if the answer is yes, the price seems to be going up. And if the price comes below the average, the price keeps going down. Very simple. That's what I learned early on in my primary school. How do I become the top student in the class? When I was not a top student, my sister one day promised that if I get the first rank, I'll get a Rolex watch. I'm yet to get the Rolex watch, but I did get the first rank at the very next exam. Okay, I keep reminding her about the Rolex watch promise. But simple, what I did, I was at the bottom and I tried to go above the average. So as long as I'm above the average, I'm fine. I keep going up. So initially, I tried to be above the 200-day average. then I try to be above the 45-day average, then I'm above the 9-day average, and I keep going up. So this is a simple technique to figure out where the price is going. Okay. And some things called trend lines, which set the floor and the ceiling that we talked about. As long as you are going up with the upward sloping trend line, or the downward sloping trend line, or the horizontal trend line, it sets the floor and the ceiling. You're moving up or moving down. So the question is, how do you see these trend lines? And I'll show you how you can draw these or see those trend lines. So very simply, the 101 of technical analysis has to do with these averages, how to be above the average and how to be above the trend lines. Simple. Okay. So if you break the trend lines, you go to the next level. If you're breaking the ceiling, if you're breaking the floor, you go down. That's all. So this one screen that you see captures the 101 of technical analysis. And if you understand this part, I can tell you, you can comfortably make 30% a year. There's no doubt about it. Because I have done it, my students do it. And one of my best students is a 14-year-old kid who learned technical analysis from me. And he's the best student so far in terms of following the rules and demonstrating that he can generate the 30% and more. Okay. But that calls for a lot of discipline, as you will see. So if you want to get fit financially, you walk up the stairs, okay, one step at a time, but just watch the steps to see that you're going up and you're not going down, okay? And if there's a fire, take the elevator and go down fast, okay? Very, very simple way to handle. Then the question is, how do you recognize there's a fire coming? Okay, so keep an eye and a ear and a nose out to smell out these fires. Okay, so in doing this, the mantra is buy low, sell high. Get in on the ground floor and ride the elevator up or double up the stairs. But before you go up, read the building plan, read the price chart, learn how to read the price chart, which is what I showed you earlier. And here, how do we read this? Okay, how do we read this chart to know that I can keep going up and that there are no such uh, places where I may go down without realizing? So if in fact the staircase is going down, then how do I know it's going to go back up? So what do we do? So how do we buy low and sell high is the key. Okay. So in all this, discipline is the key. How do I keep going up to the summit? It's in the mind. The methods are available all the places in YouTube, in various places. People are teaching. Okay, but learning the method is only one part of the job. Getting the discipline to put it in practice is the key. So it takes a lot of practice. It takes a discipline. It takes time. You need to be able to get that initially before it becomes a second nature. And every trade, and this is no exception, has its own toolboxes. So you use those toolbox tools and do your job well and learn the trade from a master. It helps. So the next two slides are my marketing spiel. So don't mistake me. I offer these courses: fundamentals of technical analysis, advanced technical analysis, and the third one is demystifying options, where you don't have to be afraid of options. It's no esoteric thing. You can use options to de-risk your investment. So the whole idea of derivatives is meant for removing the risk out of your investment. And that's what I use options for, and that's how I teach options, not as a thing to buy and sell on its own. Okay, I do offer some paid services, which we'll come to later. So let me stop here. I know I've been perhaps vague, deliberately vague in talking about technical analysis, but if I've got the point across, then we can focus on any specifics that you might have. Questions, please. Comments. So if you see the chart here, I've drawn, okay, I've drawn the averages lines, okay. So the whole idea is to see every time the price is above 9 DMA, 9 daily moving average, okay. So I'm assuming most of you know what we are talking about when we say DMA, okay. You see the price is going up. Every time the 9-day average is above 45, price is going up. So if you want to get the first rank in your class, try to be above the average. Every time beat the average. You'll automatically go up. Okay. So
Doctor, quick
yes,
quick
yes.
question, doctor. Why is it 9? Why is that number so specific? Is there a reason
Okay.
for that?
Yeah. Well, when I learned it from my master, he told me 945, 200, and I keep propagating that. Okay. Yeah, but it can, the more importantly, 9 is about two weeks of trading days. Okay. 5 trading days in a week, so 10, it can have 9 or 10, not an issue. My master picked 9 and it's worked out. 45 is the medium term, okay, and 200 is the long term, okay. So if the first thing is you try to be above this 200, because this 200-day moving average is the larger mean, okay. Average, or statistically we use the word mean, and in simple arithmetic we say average, right? So this long-term average or the mean has the power like the equator to pull everything towards it, okay. So this has a high gravitational pull, either from the top or from the bottom, and it tries to keep the price around this. Okay, so every time the price goes above, it comes down to the mean and goes to the other side, goes down, and again comes back after some time. Okay, so the first thing is this 200-day, you need to be clear. If the price comes from the top and goes below 200, you can be sure it's going to go all the way down before it comes and goes above. So this is called reversing to the mean, okay, either from the top or from the bottom. So that is one thing which constantly repeats itself in any stock anywhere in the world. Okay. Now you can use this pattern for other things also, but in this case, practitioners have used this for the stock market analysis. Okay. So the price goes below and above this long-term mean, which has the strong pull. So then the next is 45-day medium term. Again, if you see medium term, price goes above 45, comes down. When it comes down below 45, it takes a long time before it goes back up. Here you see it came down, went back up. It came down, went back up. So the price itself goes above the mean, and then the shorter averages, 45 goes over and below 200. Here the orange line is 45-day line, goes below 200 and goes up. And once it goes up, it stays up for a long time before it comes towards the thing. So the price by itself and the average prices 9 and 45 dance around this long term 200, okay. But you can use 10, 50, if you want 21, okay. But 200 everybody uses as a long term, okay. People use 10 and 50. I use 9 and 45. That's all. Okay. Whatever works. But more importantly, if you take anything less than 9, it is too close to the market for you to make any decision. Okay. Maybe as you get to the very top, you may use 5. But till such time you're moving above 200 and trying to go up, use a 45 and 10, 50 and 10 or 45 and 9, and rather than 5. I'll show you if I use 5 what happens. Okay, let me hide these. You see here, you can't make too much of a decision. See, they're so close that you'll be buying and selling every time. Okay. So it's better to stay slightly away from the market. When I say market, that particular days, so you use 9. Okay. If you use 21, you see you're slightly away. See how the price is slightly away from this average. Then you may you can use it for medium term, but if you are interested in short term, then 9 would be a better thing, or 10 would be a better thing. Okay, so I'll show you here. Okay, see, once you use 10, it gets closer to the average. Okay. Okay, any other comments or questions? Let me put back the 45 and 200. So this is the first thing that you need to learn, that if the price is above the average, it seems to be going up. If the averages themselves are above the longer averages, it is going up. Okay. So this is one thing which gives you the support or the resistance. Okay. In this case, you see prices come below. When the price goes below, it acts as a resistance. When the price goes above, it acts as the support. Then you have what is known as trend lines. I said upward sloping, downward sloping, and horizontal trend lines. So the staircase has levels. So you just connect the levels and you will know whether the staircase is going up or not. So the top here, every top is a level. The stairs come up, you reach a level, and it seems to be going down before it continues up. So if you connect all these tops, okay, so let's say you connect this top and you connect all these tops, then you see over a period of time, the staircase is moving up. Okay. Similarly, if you connect all these tops here, you will find that the staircase seems to be coming down. Okay. So this constant up and down movement, okay, over a period of time, only keeps going up, takes the staircase up. This seems to be the nature of this particular universe. It is expanding, it's not contracting, fortunately for us. Therefore, if you just bought it, you didn't know anything about technical analysis, nothing about fundamental analysis, any stock will keep going up. Then the question is, which one do I pick to get us best return? So the first thing you do, you pick good companies. Don't go after companies like SMCI, which perpetuate some kind of frauds. Okay, so be aware of where you're putting your money. So study something about the company. All information is available free of charge to everybody. Okay, the tools are free. So you study the company, and obviously don't try to play too many games. I have my grandnephew. He's playing hockey. He's playing golf. He's playing sailing. Now he's getting into basketball. He plays cricket. His parents are going crazy. Okay, and he's doing well in school. Okay, so it gets too much for everyone. So you pick your stocks, just to stick to them. Don't have too many. At least for me, that's what matters. My span of attention, even 20 stocks is too much. I learned it the hard way. When I started off, I kept on buying. I had 230 stocks at one time when I decided this is not working out for me. So I trimmed it to about 35. My returns improved. Now I have it less than 20. I don't do more than 20 stocks, and my returns are phenomenal. Okay. So, whomever I've taught this methods to, they're also doing very well. Okay. So, keep a few stocks that you can study and monitor. And once you picked your stocks, then you study their price behavior over a period of time. Today, all these tools are available free, so you can, look at the price chart, like in investing.com or TradingView and all that, and study the chart before you really start buying into the stock. Okay. And obviously, you when you buy first time, you want to know whether you're buying at the very top or at the bottom, because I said buy low, sell high. So the point is this particular bottom is higher compared to this point. So when you enter, to a certain extent makes sense, but don't fret over it too much. Okay. Questions, comments?
Doctor, I think
Sir,
the
one.
question is when,
Yeah,
when we look
put
at
up
the
your hand. I'll call
historical.
everyone, please. Yes.
Yeah,
Hello.
this is Amrit here.
Yes, Amrit.
So I think when we look at the historical chart, it makes sense. I think the
Yes.
question is, let's say you come to the end of your year chart here to the right side on the top, which is at the green at the top level, right?
Yes.
Now, we don't know. I think the biggest challenge is we don't know the last ticker that you have that's going up. Will it
Mm-hmm.
keep going up the green line on the rightmost, or
Mm-hmm.
will there be a red line that's going to come after that?
Yes. Okay. Yes, Venkat, I'll come
That's a
to you
million
in a
dollar
minute.
question, right? What's coming tomorrow is the question. What,
Absolutely.
tomorrow, a week
Absolutely.
later, or a month later?
Absolutely. Yes, I agree. So let me, instead of S&P 500, take MU, because something happened in MU in the last 3 days, and that's interesting to answer your question. Okay. Okay, you see MU here.
Yes.
This blue line is the 9-day average. 45-day average is this orange line. Okay. So you see price has been fairly above 9 and fairly above 45. 9 is above 45. So the thing is, the kid is above the average, very good. The kid keeps on performing well. At one point, you see how the gap is between the price and the 9 average, whereas here it is much closer. Okay. So now the kid is moved far away from the rest of the class and going up, going up. Look at this, how the kid is keeping the distance away from the class, right? And that to the top 9. Forget about the top 45. So right here. So when this happens, you should be a bit cautious. Is the kid really, got the strength to stand there, or will it come down a bit? And sure enough, day before, you see here, it dropped. It was going above 800, and all of a sudden it dropped all the way down to 704, about 100 points. Okay. There was no other indication except that this, kid is pulling far away from the class. So sometimes this may happen. So now the kid is again trying to pull away. Okay. Now, when the kid is pulling away, all kinds of evil eyes will fall and pull the kid down back. Okay. So right now, this is where it is. And your question is, what is going to happen on Thursday to MU? This is what everybody is asking. I'm asking the same question because I'm fully invested here. Okay. So
Yeah.
right now we reached the top of the staircase. Step 1, step 2, step 3. It went up and it came down when it closed, but still it was above the last 2 days. Step 4, way above. But look at this rise of the step. Each step has a rise okay, and a high and a low of the step. So this is like the Golconda Fort in Hyderabad. Okay, the Golconda Fort.
That's true. You can't
the Gol-
climb that.
the Golconda Fort. I only heard of it. I've not gone there and experienced it. Was deliberately built with steps like these. Each step was not uniformly the same. Each step was different in terms of the high, where the level was much deeper for some and shorter for some. The rise was much higher for some and shorter for some. The reason is the enemies who are coming on horsebacks, the horses don't like this if it is uneven, so they will not climb. So the occupier of the fort has enough time then to beat down the enemy who's approaching. Okay. Similarly, here you see every step is different. The range, as we call it, the rise of a step is called a range. This range is different. Okay. So as the price is pulling away, pulling away, pulling away, now we've got 5 days, it's been going up or even more. Okay. So you see where maybe there could be a resistance, there could be a top. So you draw what is known as a trend line. As I told you, there are only two things that I look for. One is this moving averages. Now that the price is above the average, which is the 9 day, the thing that can give the resistance or form the ceiling. Okay. When I'm dancing at this level, I may go up and down, and I can come down all the way and hit this floor. You see how far above the floor I am. So I need to be cautious. So what I do, I draw a trend line. Okay. So I can do draw a trend line connecting, let's say, this top and wherever I could find. I can't find top. It's keep on going up. Okay. So now you see I'm above the trend line. So I can expect this, okay, fall a bit. But I'm taking support at this now and going back up. So the answer to your question, how do I know what is going to happen tomorrow? Very simply, look at the average. How far away from the floor I am. If I'm too far above the floor, I'm being too crazy. I'm just jumping up. I will come down to the floor sometimes before I keep going, jumping back up. And so the question is, which is the floor? Is the trend line the floor or the average line is the floor? That we need to figure out. Now, in 101, the floor and the ceiling is primarily the averages and the trend lines. But then, if you go to the next level of the course, in terms of learning advanced technical analysis tools, you have what is known as Fibonacci analysis and Elliott wave. Okay, they give you additional tools to figure out where the floor and the ceilings are. Primarily, the whole trick in this technical analysis is to be able to understand where the floor is and where the ceiling is. Okay, I hope I've answered your question. Otherwise, I'll come back to you. Yes, Venkat.
Thank you, sir. This is really helpful and very great. A couple of questions. So
Yeah.
I follow 20 days and 50 days and 200 days,
Okay.
which is close to, I know you have 9 and 45, 200.
Mm-hmm.
So how do you identify the breakout, the fake breakout versus real breakout, right? Like say, so I sell my stock if it breaks by 20-day moving average, right? But there
Mm-hmm.
are times it's fake breakout also, then it
Mm-hmm.
goes up.
Mm-hmm.
It happened with AMD and
Mm.
it happened with SNDK,
Yeah.
right?
Correct.
So,
Yeah.
uh, but how do you, is there any technical pattern? I look at the Fibonacci series as well. I look at this triangle patterns, uptrends also, downtrends also, but still,
Yeah.
I think it's really difficult to find these fake breakouts.
Correct. So breakout is where the child is pulling far away from the class. Okay. So for some time here, the price is all together. See, the price is closer to the 9, the 45 and 9 are closer and 200. See, for some time, it's like this. as it is happening, okay, this shows everybody is closer to the average. There's no one kid who's really the top of the class, okay? So for a long time, this is happening. Everybody is closer to everybody, and then somebody is trying to pull out. So one day, this breakout is likely to happen if the 9 is now crossing over 45. This is the first indicator.
Okay.
The first time the 9 average, the top 9 students are going above the top 45 students, then you can be sure one of them is going to pull away. Okay? So
Gotcha.
this is
Yeah.
one place you can identify a breakout.
Breakout. Okay.
Yeah. Any other
So,
questions, comments? So what I want to leave you all with is this is no big rocket science. It's very simple to understand, learn and understand and execute. Technical analysis, you don't need to confuse yourself with so many things. As you see here, if I click on this indicator, all these are part of technical analysis. Look at this. Okay, there are so many things that people will talk about in technical analysis. I have not touched even 1% of it. Okay, all I have done is one thing called moving averages, second thing is called trend lines. Okay, look at this. All these things. You don't have to confuse yourself with RSI, exponential, all that. Very simple technique, simple moving averages and trend lines. Yes, Venkat.
yes, sir.
Yeah.
So when do you come out of our full position of the stock? When it breaks 200-day moving average? Because I usually do it the way I do it. If it breaks out 20-day moving average, I cut down my 33% position
Okay.
because I'm not sure again it's going to go up or down. We
Yeah.
never know, right?
Yeah.
So if it breaks my 50-day,
Yeah.
then I'll cut down. So if
Okay.
it breaks like 200-day, I'm completely out.
Yeah.
Is
Correct.
what
Yeah.
kind of strategy do you follow? I mean, is there any
Yeah.
better way to do it?
Yeah. Yeah. Okay. I'll answer that. What you're asking me is when do I come out? When do I walk out of this class? Okay.
Yeah.
All right. Somebody else also has a hand up. If you can bring your hand down, I can see who they are.
Sure.
Okay. Yeah.
Sure.
So, question is, when do I enter this class? I want to enter this class only if it's an interesting group of students. Okay. Otherwise, I don't like. If they're all dunces, why would I, like to associate myself with dunces? So, if it's a good class, I'm there. I get challenged. I am moving up. Now, obviously, sometimes I get tired and I lose interest. I may come down. Okay. So the question is, when do I come out of this AMD? Okay. Now, you don't want to come out too soon as also because there could still be a lot of momentum in AMD that can keep taking you higher and higher and higher. Okay. So you want to figure out when this movement going up is going to be temporarily curtailed before you continue. So, should I come out here? Maybe this is where one level is getting formed. Maybe the staircase will now move down before it goes up. So, if you do it with respect to the 9 or 10 DMA, you may perhaps be coming out too soon. So you always have more than one such indicator for you to make your decision. Okay. So I put 10. Let me take it out here. Okay. So you want to have more than one such indicator. Okay.
But I think you have MA9 also is wrong, right? You have something DMA. I think that's why.
Yeah, I think I put something wrong here. Okay, there you go. So I'll put the 9 back. Okay.
Okay.
So the answer to your question is, when do I sell? When do I think AMD has reached its top, that it's going to pause, it's going to come down, so I can re-enter later? So this question about when do I enter and when do I sell are very key. When do I enter? I showed you
Yeah.
what I normally do is wait for 9 to go above 45. Okay, let me put the thing back here. Um, so I put moving averages, and yeah, I've got 9 here. I go to the format, I put my style. I always like blue for my 9, and I thicken it, and I say, okay, so now, okay. So I always look for this crossover where the top 9 students are above the 45. So which means I'm in the top group. Okay, I want to be in the top percentile. That's when I want to enter. Okay, so my entry point is related to 9 and 45, and price
Okay.
being above 9. Okay,
Okay.
and all of them above the long term.
Okay.
Now, why do I pick this? I've done some research, okay, and I've seen correlations as well. So every time I do this, you see, it's an interesting area here where the price has gone above 9, 9 has gone above 45, and 9 and 45 in price are above 200. Okay. So I've done the research to know that every time I do this, I'm at the beginning of what is known as a wave 3 in Elliott wave, which is the advanced technical analysis that I talked about.
Right.
So this guy called Ralph Elliott, who's not a big time professor, he was just an accountant working in railroads, moving between US and Mexico before he settled down in New York, okay, after the Civil War in Mexico. This fellow had been studying without any computers the movement of prices. And he came up with this hypothesis that the stock market prices move in waves, okay, and which is what is now known as the wave theory or the Elliott wave theory. And there, he said, when the waves are strong, they come in 5 stages. And he said, if you are able to catch the price at the beginning of wave 3, it will take you up and up and up a long way before the waves subside. Give me 1 minute, please.
Sure, sir.
Okay, I'm back. I'm sorry about the disruption. So, this wave 3, which is the beginning of a big wave, and he said if you can identify that big wave 3, you can really ride before the waves subsides. Then the question is, how do you identify that wave at the beginning of that wave? There are tools out there which don't really help before the fact. They help after the fact. I don't know whether Dr. Manikam is here in this group, but he is one person who's using, Elliott wave very well, and he can tell you that getting in at the beginning of wave 3 is very difficult. Okay, identifying that. So I have done some research to correlate what I teach in 101 and in the advanced class. And in 101, I talk about this how the price is going up. If you can catch here when the 9 is going over 45, it goes up. And this correlates 80% of the time to the beginning of wave 3.
Okay.
So my entry point, I'm very, very clear. I don't deviate now. Okay. Having identified this, I don't deviate. This is my entry. Then the question is,
So
when do I come out? When do I sell?
Yeah.
I think even before that,
Yeah.
Doctor, if
Yes.
we have crossed that point that you're saying you will enter,
Yeah.
like for us, if we have not entered AMD at that point, you're saying we should not enter any point after that?
No, 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 no. I'm not
Like
saying that
anywhere
at all.
after that.
I'm not saying that. If you enter at this point, is very good.
That's the best.
You have a
Best case
long
scenario.
runway.
Right.
Okay.
Right.
Yeah. But once this has started, you keep entering. You can look for places where you feel confident. You enter because the selling point has not happened. The exit point has not yet happened.
Okay. Okay.
You may have a short
Got it.
runway. That's all.
Right.
Okay. But I've identified this and I've correlated with the advanced techniques. They seem to be matching. So I enter here. I'll come to you, Mary, in a minute. Okay. So then, according to Venkat and Amrit, when do I come out?
Yes,
If
sir.
you come out immediately when nine price goes below nine, you may be too soon, and so I don't do that. I look for other indicators that tell me that I should stay, exit. You see here, if I had come out at this point where it's touching the nine, it started moving back up. So I wait to get other signals. Yeah, I'll explain those signals in a minute. Yes, Mary, a question.
If you can zoom out, Professor, a little bit, like more out, you see that 9 has crossed 45 in early January, Feb, around that time. And again, the 45 came down below 9. Is that an exit point?
You see how they've been
Yeah,
intertwined and moving together?
yeah. Is it
Okay, yeah. So I say if I have not entered, I'll wait for this pull out. Okay, this is this whiplash I don't like. Okay, you see how every time nine comfortably goes above 45, it goes up. Now in this case, from this point on, they are together. So I wait for. I'll okay, do this as well. Okay. So now you see. So every time 9 goes below 45, it is going down. But price going below 9, it may come back above 9. Let me enlarge here. Okay. See, prices come below, it is going up. So using only the 9-day average to decide an exit may be not appropriate. So what I do, I also wait for confirmation. If 9 goes below 45, okay, I bought when 9 went above 45. I sell when 9 goes below 45. Okay, I'm making decent money. Okay. But I use other thing as well to confirm that this in fact is true. And one of that is you see the slope of 45, you see the slope of 9, you see the slope of 200. Would you call them all positive? They are looking up, right? See, the 9 is looking up, 45 is looking up, 9 has come down. So 9 slope is negative, but 45 is still up. Okay. Now, 200 is still up. So it gives me, if I did not exit here also, I don't worry so much. I'll wait for this 9 to turn, 45 to start going down. When this slope happens, then I know I should be really out. Okay. It's like, there's this guy called what Reddy, I forget his name fully. He was the founder of a software company in Hyderabad. Okay. Satyam Software. So several years back, one day, the founder came on TV and announced that he had committed a fraud, and that really hurt him. So he came openly and told everybody. without any major trigger. And he was a big supporter of various good causes. The company was doing very well, Satyam Software. And he said, I've committed this. I'm very sorry. He apologized in front of the TV, national TV. And of course, he was imprisoned and all that. Satyam Software went down after that. One of the things that he mentioned when he first appeared on TV to confess, he says, you know, I felt like I was holding the tail of the tiger and I didn't know when to let go. Okay. So this is what several white collar criminals have talked about. If you study some of the research work of these white collar, about the white collar criminals, one thing comes out is the slide starts and they don't recognize the slide. And by the time they recognize they are slipping, they are too far down the slide and they are going down very fast. And it becomes difficult for them to come out. So the key for me from that kind of thing is to recognize the slide here. You see 45 slide? So I look for 45 to be positive. I don't want it to be negative, the slide, the slope. So I have a calculation for that, which you can get it online. And to me, if 45 slope becomes negative, I want to get out. That's the last point beyond which I should not be sitting in. Okay. So the answer to your question, Amrit, about AMD, you see, I'm still above 9. 9 is pretty steep, and 45 is pretty steep. It's not time for me to get out. Okay. Even though the last 2-3 days have not been all that great going up, I'll wait because I made good money. I entered when 9 crossed over. Oops, sorry. When 9 crossed over 45 here. At this point, it was $206. And now I'm at $200. Okay. So if I'm not satisfied with 100% return in such a short time, and I'm still sitting here, then I'm willing to wait it out a bit. Okay. Yes, Kavita.
So, Professor, I mean, these two concepts I understand, but I keep hearing about, folks only trimming a certain percentage of their portfolio. Like, what determines that? How do you determine? Do you like, is it a is there an indication that says, oh, completely exit or only keep a certain percentage of your portfolio?
Okay.
What determines that?
Yeah, excellent question. I'm glad you brought up the portfolio rather than an individual stock. All along, we've been talking about the individual stock, AMD going up, MU going up, or whatever, right? So now you're saying, hey, I'm not putting all my money in just one skyscraper. I'm putting my money in multiple skyscrapers. I have a portfolio of stocks. So I may, based on how this AMD is doing, I may come out of AMD, but I still keep money in the portfolio, or should I come out completely out of the stock market, move the entire portfolio out into cash? Good question. Or as a follow-up to this question, you may ask me, how much of my total money do I put in each of these skyscrapers, right? So that you know when to come out of the portfolio itself.
Yep.
So this is a question on diversification. How much money, if I have $100,000, do I put $10,000 each in 10 stocks? Or should I put 20,000 in MU and 30,000 in AMD and the balance 50,000 in 8 stocks? So this is a question on diversification. I'll answer this in a minute. This is more than technical analysis. It's fundamental question on how do I distribute my money, my wealth across various opportunities such that I manage my returns or my risk better than if I were to put everything in one place. I'll come to that in a minute. Yes, Koinur, you have a question?
Yeah. So sometimes, as you are saying, all these indicators, which are actually very accurate, is it okay sometimes to look at the options open and stuff like that and make a call that, hey, you know what, because the market is becoming opening calls and puts, if there's more call options, then it's going up, it will go up versus it will not go up if there are more put options. Is
Okay.
that something, is
Okay.
that a fair way
Yeah.
of doing it?
Yeah. I started today's session by saying I'm sharing my experience. Okay. In my experience, I don't use all these things. I try to keep my life simple. And so my class 101 technical analysis is very simple. Only a few tools out of the various tools in the toolbox that experts might use. I try to keep thing very, very simple. I know one engineer, all he had was a old stethoscope. Okay. This is true because I know this person. And he was living in Chennai, and he used to be called by all these big factories, big companies, which are using steam for their factories. And he would go to see where there's a leak in the processing plant, where they're using steam as a main fuel. And all he had was one old stethoscope. And he could figure out exactly where the leak is happening and identify for them and propose solutions, simple solutions. Whereas there are other heavy duty experts who will come with all kinds of things and charge these companies very highly. Whereas this gentleman will just take a train from Chennai, go to whichever client is calling him, use the stethoscope, figure out where the leak is, and come out taking the third AC train back and charge very little. And he was so effective. So the moral of the story is, don't use too many tools and confuse yourself. At the end of the day, you want to make, if I can, I'm happy making 30% a year. I still beat Warren Buffett. Okay. So if I can make 30% a year with simple tools, I don't want to complicate with all kinds of things, and I don't do it. But yeah, your point is valid. All these other tools are available that people do use. But in my teaching, I don't use it. Okay. So I'm not able to
Sounds good.
comment
Thank
on
you.
that. Yeah.
Thank
The
you. Thank you.
simpler it is, more broadly it might apply. That's sort of the intuition, right?
I don't think it's intuition is an important part of a person's spiritual journey, but I'm not getting there. I'm able to, or this person was able to use the stethoscope and figure out where exactly the leak is. Okay. Yeah, the intuition comes from a whole lot of experience. In this case, if I'm able to figure out when the stock prices are going up, and 80% of the time I'm right with respect to the beginning of wave three, which Elliot says is the holy grail, I'm okay with it. So I keep my life simple. I just use only a few tools because my span of attention is only so much. But if someone's cognitive ability is very strong, they can do it. Sure, and they may make more. I don't know. Okay, so that is an answer to your question. But to come back to Kavita's point on the portfolio, because she used the word portfolio, uh, putting our money in one stock versus multiple stocks. That's the where she was coming from. Am I right, Kavita?
Yeah, multiple
Yeah.
diversification, and even, I mean, we take calls across. Okay, I'm trimming AMD or I'm trimming MU
Yeah.
at a certain time. So I just want to understand what the
Yeah.
reasoning behind it is.
Correct. Okay. See, putting all my money in one stock By diversified? Kavita?
No.
No. So 0% diversification, right?
Mm-hmm. Yep.
Everything is concentrated in one 0%. It's very easy to recognize 0% diversification. Now, instead of putting everything in one stock and having 0%, let's say there are 10 stocks and I take my 100,000 and put 10% in each equally. How much diversified I am? Kavita?
Can you say that again, Professor? 100,000 you put?
I have 100,000. Instead of putting all 100,000 in AMD, I take this 100,000 and I put equally 10,000 in each of the 10 stocks.
Right. So you're completely diversified, right?
I'm completely diversified. Exactly. I'm fully diversified. I'm 100% diversified. So we are able to recognize without any kind of fancy mathematics 0% diversification and 100% diversification, right?
Mm-hmm.
Just conceptually, I'm able to say I'm 100% diversified or 0% diversified. Now, then the question is, why are we diversifying? Because I don't want the risk of being stuck with one. If AMD falls down, I'm fully knocked out. Okay. So I want to be in 10, I want to be fully equally diversified. So even if one goes down, only 10% of my portfolio goes down, 90% is still saved. So I manage risk very well if I am diversified. And in diversifying, I would rather be 100% diversified, which I can recognize, rather than 80% diversification, because I'm not able to
Mm-hmm.
figure out what is 80%. I have 10 stocks, I have $100,000. How will I know I'm 80% diversified?
If
Okay, so this is the problem. So, all these fund managers who come and tell you, put 40% in large cap, 20% in mid cap, 40% in small cap. How do they know that 40, 20, 40 gives you good returns?
I think they
Nobody.
run a lot of simulations, right?
I'm sorry?
I think they run simulations.
Yeah, sure. I agree. They run simulation. But then the question is, instead of 40, 20, 40, if I did 40, 40, 20, is it the same?
I don't think so, but
no, the
I'm
weightage of those stocks in those portfolios could be
Yes.
different.
So we are getting too complicated with all this. But the fund managers throw so much at you that at one time you say, you guys know better than me, so I'll just go with what you say. Okay. So I want to keep life very simple. And I've backtested my simple strategy. I allocate equally. At any point in time when I buy, I identify X number of stocks where I want to buy and I put my money equally. I told you I enter a single stock when 9 goes over 45. Okay.
Mm-hmm.
So if I have 10 stocks which are showing me the signal where 9 is going over 45, I take my money and I put equally among those 5 stocks. I always allocate equally because I know what is equal, what is 100%. I know what is 0%, putting everything in one. I do not know what is 70% or 80%, and I don't know whether that 80% makes more returns or not. So I have backtested this strategy of mine where I put 100% diversification all the time. Okay. Now, once I put my money equally among 5 stocks, when I enter, over a period of time, each of them would have grown differently, right? So when I look at my positions after 1 month after entry, they all may not be equal. Each one will be different. Okay? Are you with me so far?
Yep, yeah, I'm here.
So that's okay. I enter equally, but they may all be at different positions because their own growth is different. But I entered when 9 went above 45, I
Mhm.
entered equally. But the slope of growth for each one of those five would be different, and therefore the positions may be different. Okay, but they're all positive. I'll come to you in a minute, Sid. So, the answer to your question, should I come out of the entire portfolio? Just because one fellow has gone below, do you have the answer?
The answer is no.
Exactly. So I only get out of that one, which is now telling me, they're taking a pause. So I come out of that one. But then now I have only four of them. I have that money now
Mhm.
cash in hand, and I don't want to be sitting on cash. I want to make that cash work for me. So I identify another one and put that money there. So at any point in time, if I say I don't want to have four, I want to always have five, 20% each, I put back in one. If AMD is not there, I go and put in SanDisk, that's all. Or Seagate or whatever it is, right?
So your strategy is to follow, where the stocks change or go down, have a negative slope, remove that from your portfolio, add something else to your portfolio, right?
Yeah.
The do factors like quarterly earning results or other things like that, do they matter to a trimming strategy?
Okay.
Like, do folks try to get out or get
Yeah.
in
Sure.
during the quarterly?
Yeah. To me, this chart is telling me everything I would need to know.
Mm-hmm.
I don't have CNBC. I don't look at TV. Simple. Okay. I'm not joking. So I am not looking at what is happening in the world except this chart. My view of the world, view into the world, is through this chart. So if the results are coming for AMD and the smart investors, the big fellows who have an ear, an eye, and nose to the ground, they know things more than I do much earlier, and they are making their moves. When they make the moves, I am able to see them here in this chart
Okay,
because they cannot hide. Whatever they do is here in this chart. Whatever everybody does in AMD is in this chart. So if I'm able to read this chart well, I know what they're doing. And accordingly, I say, okay, maybe something is coming. I don't know what it is, but something is coming. It could be a Hunter virus. It could be Trump about to open his mouth. It could be anything. It can be quarterly results. But something here is telling me something is going to happen to AMD. And accordingly, I get cautious now. Okay?
mm,
So the answer to your question, it's not just quarterly results. It could be anything to do with AMD.
got it. But your indicator really is this chart
Yeah,
here. That is
exactly. Yes. Yes,
okay.
sir. Do you have a question?
Yes. So you mentioned that you invest, equal amount across like different stocks,
Yes.
but the MA9 crossing over 45 may not come at the same time for all the different stocks, right? So in
Yes.
that case, like how do you invest across different stocks at the same time?
Okay. So I'm going to show you one thing, which is a tool that I have developed. Okay. So,
Mhm.
um, um, so this forget about this AI powered and all that. Okay. This is just to make it sound that I'm right on top of technology. Okay. So,
Mhm.
but very simply, this tool captures what I do, or I use this tool to do what I do. Okay. So here you say, I have in these many stocks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There are 12 stocks here, okay? So these are 12 that I have decided I'm going to be interested in for some time because I've studied their financials. They all look good. Okay. Not only this, the market has over a period of time recognized these stocks' performance. Okay. And rewarded it handsomely. So I go by the past. So if in the past the market has rewarded all of them, something these guys have done is good. So the market is, more powerful than I am. So I listen to the market's reward of these stocks. So I pick these stocks. Okay. Now I say, let me put put a default here. I can put $10,000 each, equal allocation. Okay. So I have 120,000 divided by 12. I've got 10,000 in each. So over the last 5 years, I want to see what the return could be for the entire portfolio, not just the individual. Okay. So Kavita, note here, I put 120,000 equally among these 12, and I'm testing out my buying and selling strategy to see what kind of returns I can make over 5 years, over the last 5 years, if I had done that over the last 5 years. Okay. And I submit. Oops, I need to. Oh, I picked US. Okay. Yeah. So now you see this tool took these 12 stocks and I said, I'm putting 10,000 each, but obviously I'm not putting in all these 12 at the same time because not all of them will have this indicator of 9 going over 45 on day one. Okay. Some of them would have started on day one. Some of them, would have started much, much later. But at any point in time, if I have more than one stock in among the 12 showing a buying signal and I have cash, I put equally. Anytime I buy equally. Okay. And anytime there's a selling signal, it can be sold even one stock at a time because I get out of that. Okay. And look at this results. Okay. So what I have done in the US market, these 12, I put 10,000 each. Over the last 5 years, I've tested out my strategy of buying using this indicator and selling using that indicator. But whenever the indicator comes, it may not be for all 12. It could be only for 2 or 3 or whatever. So whatever cash I have, I put equally among them. Okay.
Okay.
So I started in May 13th, 21, now May 13th, 26, and started off with about 118,000 invested. And you see the CAGR. I made 59.37% per year over the 5 years. Whereas if I had bought this and just kept on a coffee can, I made 40%. So the universe is expanding. This universe of 12 stocks, having picked them as good stocks, if I didn't do anything, I would have still made 40%. But I am an active investor. I'm not a passive guy. So I tried to make more than this 40. And I ended with 59%. Okay, so this 118,000 invested in both of these strategies. Okay, I ended up with 1.2 million here versus 650 here. Okay, so the fact that I made only 19% more than this 40% is not as significant as this amount. I made 1.2 million, double that of this. Okay, whereas during the same period of these 5 years, S&P has only given me 14%. So if I had put my money in ETF, S&P ETF, I would have made only 14%.
Yeah.
And if I
So,
had been a passive investor, I made 40. But here, I use a simple strategy of what I just taught you: moving averages
so, Mhm.
and slope. That's all.
So now, I mean, this leads to another question. Like, since we have like a pool of 10 or 12 stocks here, how do you make the decision? How do you make a buy call?
My buy call I showed you, no? Here. Where sorry. Where is here? Every time.
So,
Sorry.
so
Sorry.
based
Yeah.
on just one stock, you invest in all
No, no, no,
12?
no, no, no. These 12 stocks. I told you 12 stocks. No, I monitor the 12 stocks daily. It's easy because it's only 12. I've got the tools to manage 12 easily. And if any stock goes over 45, I buy. Anytime the 45 DMA starts looking down, I sell. Of course, these are not the only ones. I use 2, 3, but among this toolbox. I don't complicate myself. I don't have RSI. I don't have. I don't look at volume. I don't look at all these other things that you talked about. Okay, very simple. I buy based on these moving averages, and I sell based on moving averages and the slope. That's all. Okay, and that is what I've programmed into the software. Yeah. Okay.
So this is back testing, but how did you identify this tool in 2021? NVIDIA run is not even started in 2021. It's just like a cyclical stock, right? All these chip stocks are cyclical stocks. No one is known this about the AI thing in 2021. But you're doing the back testing now because these stocks are exploding now, right? But back in 2021, how do you know that these stocks are going to perform well? How
No,
did you
no.
identify?
I didn't go back to 21. I'm here today in 26. So what I did,
I
I had
get back
this.
tested those stocks.
Yeah, I'll come to you. Yeah, but I tested from 21, but I'm doing it right now today
Okay.
to see what if I had invested in these 12 stocks 5 years back or sometime between now and last 5 years, based on when the buying signal came, what would have been my return? Now, obviously, going forward, it my hope is history repeats itself. That's what I've learned and
Okay.
experienced in the market.
So you're keeping the same stocks
Yes.
going
So
forward. Okay.
if it did 59% per annum, my
Last 5 years.
okay, I'll show you this. I want you to know. Okay. So here you see at the bottom of the report, I've given how they have done in these 5 years. So you see here 26, May 13th, the end, right? So
Yeah.
in 26, you see how they've given 137%.
Yeah.
So they started in 21, this group of 12 stocks gave only 48. Then in 22,
I, th-
it dropped to 2%.
Yeah.
I think, Professor, what he's saying is history
Yes.
is not the guarantee for the future, right?
No, my
History,
question is
that is what the
how do
mutual
we
funds
identify
fellow.
this?
Yeah, I'll
Yeah,
come to
how do we
that.
identify these
Yeah, I'll
stocks?
address both of you. Yeah, that's right. That's what mutual fund fellows are telling you to safeguard themselves, that the past is not indicative of the future. My experiences in the stock market, history repeats itself. Patterns help you to identify when you will make your returns. So these trends and patterns and history definitely help. Okay.
Because you
I'm,
don't have Tesla here, you don't have
yes, I do. I
right?
don't have. Yes, because I tried. Okay, I'll
Okay.
answer this. How did I get this 12? Right.
List, yeah.
Exactly. That's what I want to address. Okay. But before I do that, whoever asked me about this past, I hope I've answered you. Okay.
This is an excellent tool, sir. Can we use this tool? Is it available
Yeah,
for
it's
everyone?
free. It's free. You
Okay.
can use it. Okay.
Oh, awesome. Thank you.
Yeah. You can use it. Okay. So you go to
Fantastic.
parikh.com, you will see other tools also I have. Okay.
Okay. Thank you.
See, in this one, in the clinic, you can put multiple stocks. So
Yeah.
the clinic is testing the portfolio,
Right.
but If you want to just test one, you go to Pariksh.com. There is one tool only for single stocks.
Gotcha.
Now, in this clinic, this is testing my strategy. You cannot change the strategy here of buying and selling.
Yeah.
Or you cannot change the balancing strategy, portfolio balancing. Kavita asked that question. So
Right.
here, I've tested out all that, and therefore I have hard coded my equal diversification strategy here, and my buy sell strategy are built into this. Whereas if you go to Pariksh.com and you will find one other tool for a single stock, you can enter whatever you want. Okay, so I think it is somewhere here. You can go to home and check it out. Okay.
Yeah.
Or you can go to
Yeah. Maybe I'm there.
Pariksh.com.
You just go to pariksh.com. Yeah.
Yeah, that's right. Okay.
Yeah.
So here you'll get to see here our offerings. Okay. You see back testing tool. Do it yourself. Okay.
Yes.
Yeah. Okay. So to come back to your question, how did I get these 12? Okay. Here. Oops, sorry. Here. Okay.
In 2021.
No, not in 2021. Today. I get them today.
Okay.
But I go back 2021 or I can go back lifetime also. Okay, I'll show you that as well. So what I said is I teach 101 technical analysis, simple tools. Then I also teach as part of that course fundamental, how to pick the stocks. So your question is, how did I pick these 12 stocks? Obviously, these 12 stocks have to be fundamentally strong. Their financials have to be rock solid for me. What are those indicators? We'll come to that. Dr. Vijay has posted multiple times. Mohan has posted multiple times as to what they look for in fundamental. I look for certain things. Okay. So,
Yes, sir.
irrespective of what we use for fundamental financial statement analysis, let's assume for a minute I've got these, okay, in my watch list. Then I go here to performance. So when I go to performance, you see here 3 years what the stock market has given the price of the stock, 1 year, year to date. So look at this one year to date, 3 years, 3,317% Celestica.
Yeah.
Okay, 3,300% in Celestica. You remember Celestica? Somebody posted in their group.
Yeah.
Okay.
I know what you want, Celestica.
Yeah,
Yep.
and look at Vertiv, 2,300.
Yeah.
But the point is, year to date, Celestica has fallen to 25. And you see here, month and all, it's all not so good. Whereas Vertiv, 128% year to date, 1 month, 22%. So what I do, I look at the simple presentation and I pick ones which have consistently performed in all the time frames.
Okay.
Okay, so let's say I picked about 20. I don't want more than 20. I cannot handle. Okay. So I pick about 20 of them. Then what I do, I come back to my favorite tool here. Okay. Okay. The time now is 8:30. If you want to disperse, you're fine. Okay. So I come to my tool here and I put all of them. So let's say I put here these fellows. Okay. And I do the same 5 years.
Professor Shankar, one more thing. This time I want you to put the taxes.
Huh?
The capital gains taxes, because we are trading multiple times. On an
Yeah.
average, we are going to have like 15 to 25% taxes.
Good point. Okay. So let me put Tesla also. Okay. Somebody mentioned Tesla, right?
Yeah.
So I put Tesla coin, TSMMU, Meta, and all that. So I've got 4, 5, 8 of them. Okay. So now let's say whether it's 10,000 or 40,000 doesn't make a difference. 5 years. And I say, okay, let's say 5 years. And let's put 25% tax also. Okay. and I send it to myself, and I say submit. Oops, again I have to. Uh, in, so to a certain extent, there is this back and forth I do. The composition of a portfolio is a tricky matter. Individual stocks is fine. You know when to enter, when to get out. You are able to see the chart. But for a portfolio, is a very tricky matter. How many stocks do you have? The number of stocks in a portfolio, and the actual stocks that you have in that portfolio, both of them matter because there are uh, economies of scale and scope that apply in this. Okay, so now you see I have only 8 of them here versus
Yeah.
20. There are some diseconomies, okay, which come. Yes, I'll come to you in a minute, Ashish. So now you see in 8, 40,320. Okay, now you see here 33 to 17. So this group of stocks, I'm not able to, in my strategy, I'm not saying others cannot do it. In my strategy, I could get only 17% versus 34% keeping quiet.
No, because of the taxes, I guess.
It could be because of the tax. I can remove the taxes and see as well.
Yeah, because the second one, if you just keep it, you're not paying the taxes, right? So
That's right.
you're
Yes.
not selling. You're not
Correct.
selling. You're just keeping it there.
That's
But
right.
in your
Yes.
case, you keep on
But
selling and buying. So yeah.
but then you'll see 150,000 is the total tax I paid. 149,921. Okay. But then you see the end equity here is 1.3, it's 700. So tax didn't make a big dent, okay?
Maybe just remove the tax and see. I think.
Sure,
Because
I can do that. But this
yeah.
this group is not giving me good ones. I've tested out the various combinations,
Okay.
okay? But it's
Combinations.
okay.
Okay.
I'll do that for you. I'll
Okay.
do
No,
that.
no, that's fine. That's fine.
Yeah. So if I go back to where is that? I forget. Did
The
I?
first one, sir. APH. First
Oh,
one. No.
oh,
It's okay. Just type APH.
yeah.
Yeah,
Oh,
the first one.
ah.
Yeah.
No, this is not the one. We put 28.
You did the right
Yeah.
one
Is that
earlier. The third one, no, just remove everything
Yeah. Okay. I'm sorry. I
and Amazon one, Amazon one, and
uh,
added Tesla in it.
oh, you want just know whatever you got it. Okay.
yeah.
Yeah.
Okay. So
Yeah.
now let's see.
Mm.
Without the tax, email is required. Okay. Yeah. Yeah. I'll come to you in a minute, Ashish.
Sure.
Okay. Okay. I click here. Okay. You come down. 24 to 33. So still, my active strategy in this group of 8 stocks, okay, is not giving me a return to beat the coffee can. So I try different. This is more empirical. So I try different stocks and different numbers of stocks. Finally, I've arrived at one combination for me. Okay, that can give phenomenal return, which is what I'm doing now. Okay. Yes, Ashish.
So, so in means like in a market which is like trending in just like now,
Mm-hmm.
it is very hard to get the stock. Even if whatever you choose, like which is 9 crossing 45,
Mm-hmm.
to get the entry point, right? So what do we need to wait, in this trending market, also for these stocks like the fundamental stocks, which are still, already like so up, or what do you suggest, like, in that case?
So I told you, no?
No,
Yeah,
yeah,
when 9 goes over 45, you can enter. But if you didn't enter here, you could enter anytime here.
oh, anytime. Okay,
Yeah,
got it.
yeah. Because the price is still at the buying point only.
Okay, got it.
You're betting on a kid who's above the average.
Got it. Okay,
Yeah,
thank
no
you.
problem. Sure.
At some
Okay.
point of time, it's going to come to 9 days, 9-day average for sure.
Yeah.
Maybe you think that is a good entry point if it
Well,
stays
you
come
see here, it came
doesn't
and touched
yeah,
for 9. So
yeah,
it
that's
took
the
support
point
here
yeah,
and then it broke out. You see?
right. That's the time to enter, right? Again,
Yeah,
yeah.
you can enter when it breaks out.
Yeah.
Now, could you have foreseen this breakout at this point? Well, based on just these, you may not have. Okay?
Right.
That's where some of the techniques that you learn in the advanced course helps. Okay?
Yep.
Yeah. Yes, Sonia. Hello?
Sorry, I had to unmute it.
Yes.
Hello, Professor Sangren. Thank you for doing this. This is
Thank
very
you. Yes.
illuminating.
Wonderful.
And it's very simple, so it
Mm.
makes a lot of sense.
Mm-hmm.
So I understand those three curves and everything that you said about when you enter and exit.
Mm-hmm.
My question is about your stated returns. I understand what you're saying. You didn't actually buy all these stocks in 2021. You're
Mm-hmm.
reverse extrapolating it and seeing what would have happened had you.
Mm-hmm.
Correct? Is that correct? Yeah.
Mm-hmm.
However,
Mm-hmm.
if I went by what you taught in the first part of the class, which is you have figured out a robust way to ride the waves, right? Do you
Mm-hmm.
watch the money flow? So
Mm-hmm.
you buy when the curves and the averages go up, and you sell when they come down.
Mm-hmm.
So if you went by that,
Mm-hmm.
clearly you would not have held these stocks between 2021 and 2026. You would have bought and sold it multiple times. So your
Yes, that
tax
is.
drag would not have been one single time. It would have been multiple times on multiple stocks,
Mm-hmm.
and correct. And then you'd be, albeit you'd be doing it successfully, but you would be doing this dance in and out.
Yes.
Uh, and therefore, I doubt that your actual returns would have been that high, because each time you would pay. So say, I don't know, say hantavirus becomes a pandemic, everything's going down. So you're going to sell not one, but all of your stocks.
Mm-hmm.
And then you would have to wait a little time to find the ideal 12 stocks to get back into. So on the premise of that, do you still think that those returns that would be possible? Isn't that the entire basis of why active investing can sometimes be challenging, even for very proficient folks such as yourself, let alone highly inexperienced traders like myself? So my corollary is that this would work very beautifully in a bull market, but I don't know what would happen in a bear market. Second, and third is that I think I would lose a lot of money in taxes if I did this.
Okay. All right. I'll take one at a time. Will it work in a bear market? What will I do? I'll be sitting on the sidelines. Because when the bear market selling signal comes, 45 starts sloping down, I would have exited. Okay. I may exit one stock at a time. Sometimes, like in the COVID time, when all of them are going down, I would have exited from all of them. So I'll be sitting on cash.
Yes,
Which is what
that
I
makes sense.
did. Which is what I did on March 10th of 2020. I exited the market lock, stock, and barrel. Okay. So on March 10th, 2020, I fully remember the day. I got out completely. I was fully in cash. Now, did I lose some? If I had gotten out in January, I would have kept a lot more with me. Yes, between January and March 10th, I did lose some. But because of that only, I got out safely in March 10th, okay? And then started getting back into the market from May 2020 when the upswing started. So the answer to your first question is this strategy of mine of buying and selling, while I'm dancing, I know when to stop dancing, okay? And
Yes,
I
that
may
makes
stop
sense.
dancing with one or with all of them. Okay, so if you have a signal and you just follow the signal very well, you know when to stop because the signal stops, turns red. You have to stop. Okay, so you just build the discipline to follow the signal. You trust the signal. Okay, and that happens after some amount of time, but you will get the discipline to stop when it's red. Otherwise, you will get fined. Simple. Okay. Having said that, yes, the assumption is I've tested out. I did the back testing, and in the back test, I found that if I did this, and I had a disciplined approach to buy when the signals came and sell when the signals came, I these stocks, this portfolio of stocks, produce so much of returns. Okay. Yes, compared to the passive strategy where I'm not selling at all, since here in active I'm buying and selling, there is short-term capital gains. Okay. That is why I produced in the results what those taxes I'm paying, not only for the entire period, but also at the bottom, you see, I have given you different period returns. Okay. Now you can scroll and you can see all these things here. Okay. But I've also given you the data on unrealized gain, realized gain, and all that. So you can do effective tax management here. While the taxes that I've shown here, okay, assumed automatically I'm paying all the taxes. If I manage my taxes well, I can save on taxes also. Okay. So I've
I
given you
see.
the data.
Okay.
Yeah. If you remember, we talked about that in the earlier session that we had.
Yes. Yeah.
So you can do that as well. So my experience, not just a premise, my experience is over the last several years that I've been very active in this, I have learned quite a lot in the last several years in terms of applying all these technical analysis and all that. I am an active investor. I'm not a passive investor. I do pay taxes. I manage my taxes in this way. Okay. And this year so far, between January and now, okay, in one out of the several accounts that I have, I made 106%. I paid set aside money for taxes. Overall, in my entire portfolio, I made 60%. Again, yes, I've sold, I've withdrawn, and I have money for taxes. Okay. So all this is based on my simple strategy, which is the experience I'm sharing with you.
That makes a lot of sense, and it's actually very impressive. But so you've achieved a certain amount of dexterity and kind of you kind of are in harmony with the market, and you attribute your success to understanding and simplifying technical analysis. Would that be an accurate synopsis?
You use the word I'm in harmony with the market. I like that. Exactly. Exactly. When I sit before the computer and see the chart, I'm in complete harmony. I'm able to communicate with the universe, and you can get that. Okay. If you keep your life simple, don't complicate. Very simple indicators for you to look at in the chart. You can be in complete harmony with that universe, and you can make your moves. You will make money. You're absolutely right.
I love that, Professor Sankaran. That's very nice. I think, in my experience, the more people know, the more simple they're able to distill what they know into simplicity. So I really want to thank you and appreciate you taking the time to share this with us.
Welcome, most welcome. Thank you. But I think you made the concluding remark better than I could. Okay.
So
Yeah.
One thing is
one last
great, sir,
comment.
because whereas
Yeah.
the QQQ itself, year-to-date performance is about 15 to 16%, but you are like at 60% on average across all your accounts. I think it's very hard to beat that number.
I'm telling you, it's not hard. You can do it. If I can do it, you can do it. I'll tell you some of the things that I find with people when I interact with them one-on-one. Most people complicate their life by putting their money in so many places. Try to keep it consolidated in one place. Don't have too many accounts. This tax saving strategy, it's all a big ruse, okay, by these fund managers. At best, I have only one retirement account and one trading account. Simplify your life. Don't have SEP, don't have health IRA, education IRA. I'm telling you, you are fragmenting your money and it's not economical to manage that like that. Okay?
Yes, sir.
So keep money consolidated in one or two places and manage it. Make it easier for you. Don't have multiple brokerages. Webull, Robinhood, Fidelity. You have so many of them. Why, just pick one or two max.
Yeah.
And maximum 2 or 3 accounts in that one or two. That's all. So I have Schwab because I started with Ameritrade and it became Schwab.
Yeah, mine also same. Yeah.
Right. I
Schwab
started
and-
my journey with Fidelity in 1985. So I just stuck on to Fidelity. Okay.
So you use Thinkorswim with Schwab also?
Yeah. Thinkorswim is one reason why I'm sticking to Schwab. But more importantly, Schwab gives reports wonderfully compared to
And their
Fidelity. Schwab reporting is very good. Okay.
also their live videos also really good.
Which one?
Their live videos, Schwab
Okay.
has.
I see. I have not
That
used
is
that.
also
I see.
okay.
Yeah. So don't spread your money. Keep it simple for you to manage. You'll see your efficiency improves, your peace of mind improves, much better.
So do you pick only large cap stocks or do you like?
No, I
It's
don't
always-
even look at large. I don't look at the universe as large cap, mid cap, small cap. I'm saying I want stocks which the universe has rewarded.
Okay.
Okay. If the market says this is a beautiful stock, who am I to question it? Okay. So I take that feedback and make sure it is in fact beautiful by looking at the fundamentals. So a lot of people go from fundamentals to technical. I do the other way. I say, what does the market given? So if I look at this and I say Celestica, 3,000% in 3 years, but then Vertiv is 2,000%, but continuously has given. Then I look at Vertiv and look at the fundamentals to see whether there's a truth in that. And if Vertiv definitely fundamentals are strong, then I say, okay, I'm in it. I'm in it only as long as it produces. I don't get emotionally involved with Vertiv. Okay. I don't invest in Delta because I'm in Atlanta. Okay. A lot of people are doing that. A lot of people are emotionally involved in this group in Atlanta to Delta. Okay. But I'm saying, why should I do that?
Yeah.
One question, sir.
Yes.
See, I've seen what. By the way, I took your classes. I mentioned it to you many times. It was so useful to me to go from 0 to 1.
Yeah.
Thank you. So I have seen that you automated many things, and there are tools in the market which do the trade for us, like NURP, NURP.com. So have you looked into automating this, even the trading process when it goes up, right time you buy and sell, etc. The reason why I'm asking is, you've seen my portfolio. I have set of stocks I don't touch. It stays invested, and then I buy a few stupid stocks to see if I can make some short-term money. So it takes time to research, look at data, etc. At least from my perspective. So I'm spending time, in that frequent trading in your model. The time factor is also another thing that should be taken into account. How much time we are spending in researching these stocks, right? So my question is, once we identify the stocks, like 12 beautiful stocks that you have, can we develop this, take this solution into next step and say, okay, these are the 12 stocks, here's my $10,000 each, you do the trading.
Okay. Good point. Each one of us is different. And I don't play video games. Okay. I like to go and play table tennis myself. I don't like to watch table tennis video game, which is all automated, because I like to play. So, yeah, it takes time, but I play. I enjoy playing, okay?
Yeah.
But some people watch a video game and they're very happy with it, okay? So, that's my answer.
Okay, thank you.
Yeah.
So what is the tool did you mention? Can you repeat again the tool? NURT?
NURP as in PAM.
Okay.
That mostly deals with currencies. So we'll talk offline. Thank you.
Okay. Not the stocks.
Yeah, you can post it in the group also, Nandu.
Yeah.
Yeah, very good. Any other comments or questions? Because if there are none, or even if there is some, I like to end with at a time when a person like Sonia made that remark. I really like the way she sort of gave the essence of what I do. Okay, so the main thing is enjoy what you do. You'll automatically make money. Okay.
Thank you so much, Professor.
Thank you, sir. Really appreciate it.
Thank you so much, sir. This has been mind-blowing. Thank you.
Thank you.
Sir.
Yeah.
Thank you.
Bye. I'll stop the recording now.
Thank you.
Yeah, sure.